Partnered by Times Influence.
Technology has redefined the manner in which consumers make financial decisions and purchase financial products. But any additional step in this path to purchase of a financial product can lead to loss of customers, which is defined as friction. And to eliminate this friction, Facebook has launched the Zero Friction Future Initiative. Under this initiative, Facebook recently unveiled their fifth report titled Eliminating Friction in Financial Services Path to Purchase. The aim of this report is to help credit card, loans and insurance brands in designing mobile and digital-driven marketing strategies and reduce the friction in consumer journeys across multiple touchpoints.
India is at a very interesting stage in terms of how the mobile revolution is shaping up. This industry particularly is at the center of how mobile defines consumer behavior, right? So as Facebook, it's our effort always to to help businesses understand what consumer insights are prevailing in the industry, given that digital is impacting the financial services industry in a big way.
First up, to decode friction, we had Sandeep Bhushan, Director and Head of Global Marketing Solutions for Facebook India.
What does the future of business look like? The whole point of the future is what is the consumer experience that moves faster, right? That's the only axis that matters. When consumer experience moves fast, we gain share and we can charge the premium for the service or cut the cost. And that's the point of the future. There is nothing else for us to chase as businesses, right? And this is interesting. Consumers are not interested in journeys. It's the fact that we've not offered them a quicker path, that's why the journey exists. So this is an experience. So I have decided I'm about to signal, and this is a phone experience, this is a likely web experience, this is a retail experience, and any of these is what we call friction. So make the minor piece that I have decided I need a loan for my kids' education or for my car. From that point on, every piece that comes in, which either slows down my fulfillment or stops my fulfillment, is what we call friction. If there's friction, there are two things that are going to happen, right? Apart from the fact that frustration somewhere will affect brand imagery and long-term brand play, more important business implication is they will abandon their journey, or you, the company, financial service provider, or they'll abandon the journey full stop. Our work across Asia on this theme suggests there's several $100 billion at play in a short-term window of, let's say, 6 months, where it's either deferment or denial to you, but either case, this is loss of share. Either way, you didn't get the business for sure. This is a classical funnel: awareness, consideration, intent, and purchase. Right? And there are two types of friction: non-media and media. Media is what we can solve today, give or take, virtually everything. So look at the stuff on the right. Targeting, advice, information, reviews, any kind of information that will make me complete the cycle is the media friction part. The other is non-media friction. It is the mix, the product itself, right? If your proposition itself is not good for me, of course it's friction. So I started to take a loan, but the kind of guarantees you want on my loan is a no-go. I don't have that kind of asset structure, and that's fine. We can stop the journey. So that's on the left side. We'll stay on the right side of if a consumer were to start the journey, what are the interventions that will be required to make sure his friction is removed. What's our right to play in this space? This is a financial services conversation, so why is Facebook talking about it, anchoring this conversation? We think that the advent of mobile is actually the big game changer, right? And we have a particular space within that mobile infrastructure, both in terms of reach and in terms of time spent and in terms of tools. So that's what we bring to the party. These numbers are known, right? It's all a smartphone. It's more than an hour a day, and it's always on. Even when I'm watching another medium, I'm on my mobile. And mobile influences purchase journey is very well known, right? So fact is, we are spending all our time on mobile. Not a surprise that all information is broadly coming from there. Even though fulfillment, also known as last click in many cases, may happen on another channel. Two pieces happen. One, mobile is lowering friction. That's simply because on the mobile, I'm able to access information I want, and in many, many cases, I've already told the apps that I'm working with who I am, what I want. So what you're serving up for me in the first place is far, far more relevant. Which means because information is so quickly available, it compacts journeys, And compacting journey in any consumer interface, as we are aware, is the way to maximizing sales and revenues and action. So we think, therefore, that with our tools on the Facebook and Instagram side currently, and eventually on the WhatsApp side, we can significantly reduce the friction. So clearly, the future, in fact, the present belongs to those who make their consumers move now. We're going to do these three things. We'll map the friction. We'll talk about a busting plan, and then, therefore, get to the zero friction. Thank you.
A research report published by Facebook threw light on the potential loss of revenue and opportunities for financial services brands in the path-to-purchase journey.
The report is actually divided into three very critical sections: credit cards, insurance, and loans. Let's go into credit cards. If you look into the funnel out here, if the total population is 100, the people who are going to make a decision is about 40%. They go through the journey of awareness, consideration, intent, and eventually 11% make a purchase. Now, if you look at the total friction score, it's a whopping 29%, almost 1/4 of the people drop out for friction. And media friction accounts to about 11%. Let's understand how big is this opportunity. What's the material impact of what we are talking here? By 2022, our hypothesis is 8 out of 10 purchases will be through a mobile or a mobile influenced. And given the fact that Facebook plays a very critical role, we believe that the Facebook influence is going to go 1.46 times for a credit card purchase in the next 5 years. We believe that there is almost a 22% shorter journey from an offline, paper-based credit card application, onboarding, versus to a mobile-based journey. This is straight away bottom line efficiency improvement. Okay, we are talking about an opportunity of $38 billion opening up with a 21% efficiency improvement on the acquisition cost. If we add up to the opportunity, what it exists today and what it looks in the next 5 years, the number is an $84 billion funnel to look at for the category. Let's move to insurance. We believe that insurance can be broadly divided into life and everything which is non-life. For life, what we believe is 38% is what is the overall friction. The media friction is about 18%, almost half, or a little more than half of it is mobile. For non-life, the numbers are not very different. So what's the opportunity that we are talking? Again, 8 out of 10 will be mobile influence. That's for life. And what's going to be the Facebook influence? We believe it's going to be much more than what we saw in credit cards. It's almost 2.8 times in terms of the purchases. What's for the other than life? It's almost 3 times as the Facebook influence goes up in this category than what it was in life. This is, again, another great efficiency story, because how do you start converging your mobile journey so that the time taken is much shorter, which means you're going to save more money acquiring a customer. If we are talking about a reduction of 5 percentage points for life, we are talking of a $54 billion opportunity on the funnel with a 31% efficiency improvement on the acquisition cost. This is big. On non-life, a very similar 5 percentage points opens up about $16 billion right up at the funnel and giving us a very similar efficiency on the life side, and the non-life almost about 29%, which is on the acquisition cost. If we add up what we have today versus how the future looks like in terms of the influenced sales, we are talking about a $130 billion opportunity at the top of the funnel. Loans. We kind of broke it down into 2 categories. We took personal loan and we bucketed everything else into other loans. But this is how loans are being looked at, the friction. So almost 31%, that's a very, very high number. The media friction is almost 1/4 of the overall friction. On the other loans categories, the story is no different. 33% being the overall friction, with 8% being the media friction. 6 out of 10 by 2022 will be mobile influenced for personal loans. The number which is really startling out here is 3.7 times influence of Facebook on personal loans. 7 out of 10 for every other loan, which is non-personal. And what's the Facebook influence going to look like? It's almost 3 times in the next 5 years. The journey is going to become 8% shorter. Now, that means that the decision will be much faster, or at least perceived faster for the customer, delivering a stronger experience, because remember, we have a huge friction which is non-media in this category. So if I'm going to look at this, the ripple effect will be far better for the category in terms of efficiency driving for the rest of the frictions. So what's the number? If we reduce by 3 percentage points from 8 to 5, we're talking about a 38 billion funnel with a 21% improvement on personal loans in the next 5 years. The same if we look at loans which are not personal loans, the number is obviously way larger, almost 5.5 times, with 181 billion going up to 24% reduction in the acquisition cost. We just added up these two numbers to show you what's real right now and what the future looks like. It's for the loans category. That's the way we intend to move to a zero friction future. Thank you so much.
Welcome back. Next up, a group of top industry leaders from the financial services industry discussed the findings of the Zero Friction Future Report and the implications that they see for their businesses and the industry for today and in the near future.
I'm going to lead this discussion first with you, Virat. I want to understand from you, what kind of friction do you see your consumers face when it comes to accepting your brand, and what are you doing to avoid it? What would you want to do in the future?
The first and the foremost thing means we have been focusing on the customer pain points right from quite some time. This technology obviously helped us to find a solution which is more innovative and user experience is great. But when we get into this thing aspect, we figured out that why will a customer be reluctant to open his bank account? Okay, it's as basic as that with which we started thinking about, and we realized that, okay, first and the foremost, that there was a lot of paperwork involved, there was a lot of visiting the bank branches, and then it took a lot of time. And that's where we gave a birth to this product called 811, which brought down the timing of the account opening from a couple of days to less than 5 minutes. And that's what changed completely the industry. It helped customers to do what they wanted to do more easily, and that's the friction we got. We were the first one of the first ones perhaps, to have a voice bot on an IVR. Means today I can very proudly say that our voice bot Kia handles more than 1/3 of the queries which come on our contact center.
So customer acceptance has been great.
Yeah.
Okay, I'm going to ask the same question then to you, Manish. What are the initial friction that customers do face when they come to your brand?
First friction is the benefit discovery friction. First, when you come in, is it for me? Is it not for me? Where does it fit into my life? My life has become so much. The second discovery point is the price choice discovery. What is the price? And most people still don't know that large covers of 1 crore, etc., can be bought in 500 rupees a month. And the third, a huge amount of friction happens in process discovery. Now, when I'm about to buy, then it's not only payment in our case. You can't just click a payment and do. You have to submit documents, you have to undergo medicals. We have identified friction points across the 3 buckets, and we are trying to work on that.
Dinesh, what are the broad trends you witness, and how do you see essentially mobile playing a role in transforming this sector?
Mobile is going to be clearly the future, and mobile will actually force brands to compact the entire journey. There is no doubt that brands in the BFSI space will have to go down that road.
How are you using the mobile?
So, for example, if you look at Yono, which is our comprehensive digital platform, it's actually a mobile-first thing, even though we are available on all. It's an omni-channel product. But if you look at our consumption levels, it's largely on the mobile platform. So it's one platform where we've actually gotten together not just banking services, it's also offering the entire bucket of financial service products from our entire group. So that's how we are actually leveraging mobile technology.
Pulkit, what are your inputs on the strategy that financial sector brands must have to essentially use mobile phones when it comes to market financial products and, of course, to even bust some of these frictions, that we've discussed today?
Now, when I bring the Facebook angle, if you really see what we have across our suite of apps is fundamentally one, the scale and the reach. So you imagine 290 million people access Facebook monthly. That's a big number, right? And 99% of them access it on mobile. So we are akin to mobile internet ecosystem in India. And that, what does it do? It offers you one massive opportunity to go and acquire consumers. Our targeting, when layered with targeting, it helps you to understand your consumer better so that you can cross-sell and upsell products. And every single person sitting in the room has a different feed. That's how the Facebook feed works. So imagine when we bring scale, targeting, and everybody having a very different feed, you can personalize the message that you want to deliver to the consumer, thereby reducing friction or increasing the chances of converting users to buy a product from you.
Gayatri, I'll come to you now. What is the biggest challenge or friction that you see in your industry which is yet to be answered by this entire revolution?
Take it in terms of life insurance, maybe I would say is the toughest. If you're insuring your home, if you're insuring your car, if you're insuring some things, why don't you insure yourself? That's the kind of awareness that needs to really get published. And I believe Facebook kind of social media can play a tremendous role in that, in terms of getting that awareness on taking a life insurance. When you come to loans, right, my view is very simple. Right from, the awareness of the start, the intent to completion, the payment on the mobile is the easiest thing to do. And it can happen in 2 minutes, less than 2 minutes, 3 minutes. It's a question of who does in terms of the fastest way of technology completion, and it can be accomplished, not a problem. When it comes to, if you take a home loan, you have phenomenal information data available today. How quickly the click can go on, right, in terms of saying what is the amount and can you sort of get that with you and yourself or a co-applicant is needed. And then the most important, in my mind, the friction that can be solved there is getting an immediate draft sanction letter. You need to lock me in. I don't need to go do shopping. That is when that now will happen. Credit card to me is more a commodity, but there also the friction can be easily reduced because it is understanding the need, the trigger coming from the bank and not the trigger coming from the customer. Okay. The trigger coming from the service provider and not the service seeker.
On that note, I'd like to thank all of you for joining me on this panel, giving us very interesting insights. Thanks to all of you for joining.
Thank you.
Next up, Facebook's Jyoti Narula Ranjan shed more light on the concrete strategies and footsteps required to make zero-friction future a reality.
Let me present to you the solution suite which we think can offer you these solutions to really reduce these tough points. At the awareness level, what we believe is Facebook brings the very strong technology of signals. The entire Facebook family of apps works on signals. Use this technology to your benefit. Build multiple creatives, talking to users at various touch points, wherever they are. And don't forget to drive your message association and drive brand awareness. At the consideration friction, make use of native ad formats of Facebook. Make use of dynamic creative optimization. Let the user know more about your product through sequencing. And don't forget, at this stage, you have to reiterate your message again and again at a higher frequency because the user is really considering a lot of brands at the same time. What Facebook also offers is guidelines to really build mobile-first solutions. At the intent stage, where we think we can learn a lot from you, use messenger chatbots. Bring in your call center processes online. Let a lot of queries be handled through machine learning. And as Facebook, what we offer is optimizing for a long-term value. Don't go for one-day optimizations. And continue to build trust by re-engaging with high-value customers. We have 13 different objectives for all our advertisers. What we also have is a real-time machine learning-based algorithm which is continuously putting our users across these circles in the Venn diagram. So if there are 100 of us here, some of us have a higher propensity to respond to one objective while vis-a-vis other. So when, as advertisers, you want to reach a certain TG, just picking up one objective won't do the trick. How do you make use of that technology of Facebook to give you results? This is what we call as a signal technology. It's a suite of 4 things. You can use Facebook Pixel, you can use mobile SDK, you can use offline conversions, and you can use custom audiences. A suite of these 4 things actually make you use the same signal technology which Facebook uses to serve relevant information to 2 billion people across the globe. Let's see. A financial services user who wants to buy a product is of 3 different kinds. Either he's a scroller, or he's a searcher, or he's a seeker. So you have to keep that in mind. You're not building for just one category of the user. And the user is not buying a financial product. He's living his life. It's not a mortgage. He's buying a home. It's not a loan. It's my education. And it's not a savings account. It's my hard-earned money. There is emotion attached to it. So keep that fact in mind. To give you a data-driven approach, the advertisers who follow insights and create a lot of creatives actually see results. So if you look at the ROAS that people get from highest performing created versus bottom performing creators, 11-time difference. By testing and optimizing continuously, advertisers have been able to get efficiencies of 23% cost per incremental buyer. That's massive savings, right? The second aspect which we want you guys to think, the family of apps that Facebook really offers are real opportunities for you to show impressions, to show your ad. So build your ads for all placements. Don't just build for news feed. Build for audience network, build for Instagram stories. And we are here to help you with a lot of suites which can make it easier for you to do it. And for an ROI-oriented industry like you, here's a graph to tell you how your average cost per outcome is always going to be the least when you actually run ads on all placements. This is a key stat that we want to present to you because this affects this industry the most. So this is a result of a study done using the landing pages on Facebook. What we notice is if there is a 100 millisecond delay on the page load, that can actually hurt conversions up to 7%. For a user who's filling the 35 field form on a desktop, and if he has to fill the 35 field form on a mobile, it is going to take him 38.5% more time. All of this hurts your business. So what do we say? We offer you this entire suite of native ad formats, from awareness to consideration to acquisition. And a key aspect of this, to give you an example, the second format that you see here is Canvas. It can pretty much act like a microsite for you, giving all the information upfront. The user need not go out of Facebook to go to your website or load the page. Third is lead ads. It can be easily used by your pre-approved products to collect just an acknowledgement from the user that he's willing to talk to you. Make use of these native ad formats and bring down the friction that the user feels when he tries to load your page on his mobile. And that's the last slide that I have. All the friction points can be removed with the solutions that we have to offer to you, using all the aspects that we have discussed. Thank you so much.
A zero-friction future studied here in the context of the financial services industry will very soon adopt all the relevant mobile commerce strategies, with Facebook leading the charge.
I think it's a superb initiative, considering that India is going digital in a big way. With such an initiative, I think it's going to give a lot of impetus to brands to really take these lessons back home and implement them in their marketing initiatives. Because at the end of the day, what matters is customer delight. The lesser the friction, the delight is going to be higher. So I don't think this is an option to marketers. It's actually going to be a must that marketers will implement and should implement.
It's a fantastic concept to work on, and this period where everyone wants everything now, does not want to wait for anything. And that's where I think this is a very critical step which Facebook has taken, and I think it will help spread the concept and what people were asking the subtle requirements of the customers now are going to become more open, and they would understand what the expectation from the product manufacturers would be.
First of all, I love the name. I think zero friction future, you cannot say it better than this. We have seen the consumers, the way they are changing in terms of their time and effort, and this initiative is very welcome. In BFSI, consumer efforts are, a lot of people want to come and do the transaction, and they drop out, they fall out because there's friction. So this initiative, which will create an awareness in the industry as well and help us think even better, I think I love the initiative.
With this, Facebook's initiative on zero friction future in financial services, automobile, fashion and the travel sector came to an end on a very promising note, guiding businesses on the full impact of friction and how to eliminate it right now.
Partnered by Times Influence.